Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is April 7th, 2013 edition of Market Outlook. Okay, so lots of changes in the global picture. We're going to cover the usual fare, get into a little bit on Apple, and also the Russian ETF, which we had mentioned a couple weeks ago, is also demonstrating some interesting patterns. Be sure to sign up for this on our website at marketgauge.com, and you get this email and video newsletter free every week. Okay, first of all, where are we in the key indices? Well, the Dow is clearly our strongest as we flip from smaller cap stocks into bigger caps, and the Dow, of course, is the biggest index indicative of big cap stocks. Overall, things are clearly intact across the board. Let's take a look. Although, we do have an interesting two-day pattern in the Dow, sort of a potential reversal pattern, although Friday's close closed well into that reversal pattern, mitigating probably its negative effects. But meanwhile, let's take a look at the weekly chart. As you can see, we're at this top end of this nice channel here. We keep on, we've tested it a couple times, accelerated out from it, closed with an indecisive week, slightly down in some of the indices. Actually, for the Dow, you basically closed unchanged for the week. But meanwhile, you can see accelerating 65-week moving average, up, accelerating 200. We're stacked and sloped. As I had mentioned earlier, the biggest concern we had was that you hit overbought readings. So not surprised to see that seesaw action with some dramatic down moves as well. So meanwhile, we're still at overbought readings on the weekly chart, which suggests more sideways action at best. So let's keep an eye on that ball as well. Now, on the daily chart, as you can see, similar pattern played out on the daily chart, accelerating 50-day moving average, accelerating 200, stacked and sloped, but intraday, on the RSI, right in the middle. Plenty of room to move either way. The way I would manage this is clearly you've got now a market with some nice compression, although it moved out and then back in through it. The 143.50 level, pretty critical in the Dow, as is if we take out the highs, which is around 146.50, excuse me. So there you have it. Those are the boundaries that you want to pay attention to. And I'm just going to put those in so you can see. And in the interim, what we have is some nice compression or sideways action. So just to define the trading range, compression, here we are. So that's your range. So we want to watch a break of either one. Moving to the market internals. Interesting, because on a swing trading basis, or what the McClellan oscillator tells us, is that we hit the lower bounds or the bounds of a potential buy signal and a bounce up. So you can see here we hit our buy, the minus 150 level on the McClellan oscillator. Again, intermediate term, good for swing to a little bit longer than that too, if you're more positioning for a couple weeks out, so to maybe a month. But nonetheless, we hit oversold readings and have bounced up from it. So there you have it. On a shorter term basis, for day to mini swing, you can see up down volume and advanced declines, which is this here, basically in the middle of the range. And so its sell signal from several weeks ago basically still intact, and we haven't generated a new signal, but we are sort of in the middle of the range. So this indicator is negative, slightly negative to neutral. Okay, because obviously we're only using about 10 days worth of data here, and essentially that this signal here has now persisted for several weeks. And of course what we got is more sideways action than a sharp down move, so that is more indicative of a scenario where you're in a bullish market phase. Okay, so now let's take a look at TLTs. Those are bonds. Very interesting. As you know, if you recall, a couple weeks ago I covered the bonds. We noted that we had closed above the 50-day moving average, moving into what we called a weak recovery phase. It confirmed and then exploded. Now what we have here is tremendous volume. Now in regards to what the overall trend is, 97 here on the RSI, that's pretty overbought on the daily, and you sort of had a doji or indecisive day on bonds, so definite possible blow off. If you look at it in the bigger perspective, the weekly charts, clearly we've the trend line on the weekly charts and that key moving average, that 65-week moving average, crossed at the same point, blew through it, closed above it, but again starting not quite overbought, so you got some more room on the upside. But considering where we are right against old critical highs, it seems to me that this huge move within the last couple of days out of back into treasuries might be a bit overextended. But of course we're going to let the market tell us what to do. This is definitely an upgrade in a phase change on the weekly charts and also on the daily charts, so as well as on the monthly. So where we had this situation where it looked like the great bomb bubble has popped, if you look at it, we're all the way back to where we were since December, and pretty close. I mean, you're still in the meat of what I would call some pretty important resistance. So let's watch to see if this doji indecisive day with a potential blow-off was the exhaustion and the reversal of this move. Or is it, if we hold in here, a possible another test of lows in interest rates, which would certainly be shocking on a fundamental basis, looking at this market. But nonetheless, we have to see where these capital flows are going, and obviously the euro crisis, the banks over there of seizing assets could be showing up here as well. So let's keep an eye on that. Let's take a look at gold. If you recall, we were looking at the gold chart last week and pointing out that one of the critical levels to hold on a weekly basis was that 151 level. And guess what? We punched through it. You had a pretty dramatic sell-off, and at the same time, on Friday and on Thursday, you had what we call a slingshot pattern and a key reversal, and look what happened. Right around this 150 level, we closed above 150, yet on a weekly basis, this key reversal pattern in here, where you closed in the upper 25% of the trading range on Friday after a sharp move down with a new low in here and a new low on a daily basis, yet closing in the top part of the range, was an indication that you have a potential key reversal. On top of that, it occurred right where the market had to be rescued on the weekly chart. So you have a potential key reversal. This gold is really, really interesting here. It's pretty critical that this key reversal holds. Obviously, we might get another test in here. You had a pretty climactic sell-off on this low here. Not quite the volume that we saw back earlier in the year or late in February. So not quite the huge blow-off that you would normally see in volume. So let's keep an eye on this. But this pattern here is really critical. All right, so now a couple other things I want to cover, and one is Russia. And then after this, we'll cover Apple. Russia. Remember we had talked about the political scene and how they're definitely, the Russians under Putin are definitely looking to flex their economic muscle, seem to be able to do that to some degree. And what we're looking for is some opportunity to get into the Russian market, maybe on a key reversal. So what you can see here is earlier in the week, along with the drop in gold, you had a dramatic sell-off on 2 times or more greater than the average volume, an inside day, and then a reversal day here. So if we and a new low. So if you you make a new low, close on the absolute highs within a couple of days of this climactic bottom, you have a potential reversal pattern here in place. So let's also keep an eye on this Russian ETF. This could be a key turning point. A little bit overdone on this, and again, it's also pretty much playing, this is happening against the recent lows that occurred in November. So this is also a pretty dramatic demonstration of just how big the divergence is between the U.S. equities market and a lot of the overseas or foreign markets, including Russia and China and several others. So we have that. Okay, so the last thing I'm going to cover is Apple. And let's take a look at Apple here. As you can see, the test of the declining 50-day on Apple definitely hit major resistance. We caught a really nice piece of this run up here, got out, and the market sold off. Here we are holding this critical 420 level. That was pretty much the low, and Apple bounced along with the rest of the market on Friday. So it's sort of this potential reversal pattern here. Obviously, we're going to have to hold that lows that were put in right around Friday or a little bit lower. I think the low here is probably about 419 or so. So that's a really critical level to hold. You can see back here, that's also a critical level right here. And 419, if we don't hold 419, what I'd be looking for is another move down to about 370, which is the 200 weekly moving average right around here, and also coincides with pretty good support going back to late 2010 and 2011. So we've covered quite a bit. That's it for now. You can see that we have a significantly different global macroeconomic picture than we had just a couple of weeks ago, with the change in bonds, the dramatic drop, and potential recovery in gold, along with that reversal pattern in the key U.S. indices that is yet to be determined how that plays out. So look forward to seeing you next week. Don't forget to sign up for this, and bye for now.